Where did you grow up, and what was your first exposure to the media world and markets?
I grew up in a small mining town in Upper Michigan on Lake Superior. So iron ore was discovered there. The iron ore that really made America. So the iron ore, they put it on boats. My grandfather worked on the docks. He worked in the mines. He was a loadmaster loading the iron ore pellets into the iron ore boats that would go down the Great Lakes, and then they would take them and make steel out of them. In Indiana, they'd take that steel and send it to Michigan and make cars. So that's always been part of my life. Been very aware of booms and busts and commodity cycles and how markets work and the psychology of it. I ended up going to Michigan State University, which is the first land grant institution. So there you go, MooU. So I guess I got some foundation for commodities there as well. I thought that I was going to be in broadcasting. I ended up being in broadcasting, but after a long route, it was formative. Obviously, I studied Michigan State advertising degree. I moved here to Chicago. Chicago's a big city. I wanted to work for Leo Burnett. The Gulf War started in 1990, and they stopped interviewing. So I would go down and hang out at the exchange because I've always been fascinated, obviously, with capitalism and opportunity. And where's the greatest bastion of capitalism and opportunity in the world was Chicago, and is Chicago still. And I was hired. Someone saw me in the viewing gallery, and I was hired. And later on, my friends have discovered that I was hired not because I'm smart, but because I was tall. So in the pits, that was a big deal. They needed you. You needed to be seen, and that's how I got started. My first job was as a runner, making $2.35 an hour, working not even 40 hours a week. I think you could work 20 or 30 hours a week. So I was a runner at Roosevelt Collins and in the grain room, and I got to see, and there is no formal education for trading, or there might be now, but at the time there wasn't. You only learn by doing. So I would be with people that didn't finish high school. I would be with people that, went to Ivy League colleges. So it was an opportunity game, and you wanted to be there to absorb as much as you can because everyone's goal was to be a floor trader. The glory is gone now, but to be a floor trader was the greatest occupation in the history of the world. It's you, the markets, and that's it. It's just unlimited opportunity.
What was it like to be a runner?
Think about this. Everything now, you click a button, trade's done, boom, it comes. You know instantly what price you got filled. Back then, you would call your broker would call the floor would write up a ticket, hand it to a runner would take it into a pit, the trader would endorse it, fill it, throw it on the floor, a runner would come by, pick it up, and bring it back to the desk would call the broker, and the broker would call you. That happened for millions and millions of transactions for 150 years. It was so efficient. Yeah, there were times we couldn't find tickets, but from a percentage standpoint, it's amazing how much business got done that efficiently by just hand signals and runners and pieces of paper. How shall I say politely? We're dealing with the old boys club, all right? And the old boys club didn't always play nice. And there was, they don't use the word anymore, but, you had this kind of initiation. And, so you had to kind of suffer a bit, but you were there. You were there at the epicenter of opportunity. If you can make it there, your life is set. So everybody's willing to sacrifice a little bit of personal dignity and so forth and just absorb as much as you can. And what I saw from trading, and in retrospect from where it is now, traders, have been glorified, and everybody looked up to them. Everybody wanted to be traders. Women wanted to marry traders. They wanted to date traders. The traders had the best houses, the best cars. They had it. Now, upon retrospect, it wasn't because they were good traders. It was because of who they stood next to and providing an edge. Now, the market has completely changed. Now, anyone has opportunity. Whereas in the past, with the pits, the trader had opportunity to make money based on who he stood next to, taking the edge and providing liquidity. Okay, because markets had spreads back then. Now our spreads are in pennies. There are no commissions to trade. You can trade any market, any direction, anytime. Back then, you could only trade the market you were in. That was it. If you were in the corn pit, you could only trade corn. You can't just wander over to the bond room and say, I want to start trading bonds right now, because everybody has their geographic area. And looking back at it now, in the physical environment you're in, the smells, the sounds, the yelling, the screaming, doing that every single day, I don't wish that on anybody. And it's so different now because anybody now can just press a button and do a trade. There's no barrier to entry. And actually, that's actually risky for a lot of people because you don't have to think through a trade that much now versus back then. You had to recognize opportunity, and when it was there, take it, but you couldn't force trades. You couldn't make things happen because if you did, you lost money.
What was the next step after being a runner?
Unless you have someone that's going to let you be their deck clerk for an actual trader in the pit, there's a progression you have to follow. And it's just about being around the right people at the right time, just like anything in life. And eventually you want to get someone to stake you if that's the case, or if your family has money. But, a lot of these guys, and 95% of people blew up, meaning they tried trading and they lost their money. Some would come back, some would quit. But the next step for me was being a phone clerk. So I was a phone clerk. I would take the phone call from the broker and write up the ticket and hand it to a runner to take in the pits. So I was no longer physically running, so to speak, into the pits. But there's stress with that too, because, if you write an order wrong, you don't get to keep your job for that long. So I was a clerk. I realized a lot of my orders were all very similar, very small, but all very similar, hundreds of them a day. And I started asking questions where they were coming from and, who was providing these orders. And so I finally recognized that a brokerage firm was sending in these orders, this brokerage firm in California. And they eventually asked me, they said, we need people. Do you want to come out here? So I'm a Michigan kid, Someone wants me to come to California. I'm going to say yes. My answer is always yes. So I had left Chicago and I worked for a commodity options firm, Opportunities and Options, in Ojai, California, who was affiliated with Ken Roberts, who was this great marketer that was providing the customers that we were helping understand the markets better.
What was it like to be part of a phenomenal marketing machine?
I'm a young kid from the Midwest, ignorant sometimes, and I didn't really put two and two together right away. But I later realized that this was the greatest phenomenon in the futures markets, and introducing people that really had no idea that they recognized that as the greatest business. As a trader, all we're doing is recognizing opportunity. And for me right now, I'll trade anything, anytime, any market that I can get in and out of smoothly, and I can control my risk. I don't care what I trade. It's how I trade. But at the time, commodities were such a foreign investment opportunity to people, and he brought it to the masses. He was great at marketing, getting people to understand the basics. Everything is about commodities. Commodities are simply supply and demand. Like when I was a kid, I got to understand the cycles and psychology of iron ore. And also we had a lot of copper and gold up there and timber and so forth. So I understood resources my whole life. So he introduced this to so many people and they could get it, and people saw trading places with the orange juice and people started to get it. It's another opportunity. Prices move, prices get high, and then cure for high prices are higher prices. Then people develop more of the product and so forth and so forth. And so the markets move, and it's just our job to learn how to take a piece out of the market and control risk.
What were the commission rates back in those days?
For all commodities trading, it's difficult. We'll all agree on that. Obviously, if your commissions are high, that's another hurdle you have to overcome. But I think at the time they charged $100 per contract, which was a lot of money. But at the same time, they were charging $100 in stocks as well. So it's kind of the same price Merrill Lynch was charging for stocks. And it was interesting. People aren't trading 20, 50 contracts at a time. A smaller account, 5,000, like you said, is kind of a gentleman's agreement that was in the industry to make sure someone had money, that there was money that they could work with, that you're not, it's not going to be, crushing to that person if they lose that money. So that was the difficulty. That was one of the things being a commodities broker. You've got to know your customer. You've got to realize, who should be trading and who shouldn't be trading.
What was it like for brokers as clients were experiencing either success or failure?
I want to help the customer as best I can. If they're interested in other strategies, great. There's millions of opportunities and millions of other things they can try. And one of the things I thought about opportunities and options was interesting is that it introduced people to options. Options have limited risk. With futures, obviously there's a lot to it, and the leverage, it can get to you very quickly, and you've got to be super disciplined. When I was a kid, you couldn't put stop losses in. And so forth. So it was, electronically anyways, but, in the markets opened up sharply higher or sharply lower. So your risk management wasn't there. So I think that was probably the greatest, detriment to trading is that you couldn't control your risk because you couldn't decide where you want to get in and where you want to get out in a disciplined manner. So now things have changed. Now you can get in and out anytime you want. The liquidity's there. The commissions are zero. So I think things have changed, but I think the introduction of people to options and options on corn, options on orange juice and so forth, I think that was a major step forward. And that's what I try to do because I think options for me are a better vehicle to trade. Futures are great if you know exactly where the market's going to go. But options give you so much more staying power and other advantages of probability.
Why did you leave California and what did you do next?
I still had the bug for the trading floor. I still hadn't given up. You read Market Wizards, you see all the action. And this is, like I've said, capitalism at its finest. You can't construct a better business. You work when you want, how you want. You don't have inventory. You don't have employees. And if you can figure out a way to make money as a trader, that is the greatest vocation in the history of the world. I'm not breaking big rocks into little rocks. I've seen the mines. I've been on the railroads. So I wanted to use my knowledge, but in a positive way. So I left California, which was interesting. It was a great experience in my life, but the markets opened at 5 a.m. in California, and I lived an hour and a half away. Because if I'm moving all the way to California, I'm getting a beach house. And back then, real estate was depressed. So I could rent this 5,000 square foot beach house, and I had 4 roommates that paid for essentially for the house, but I wasn't taking advantage of the so-called California lifestyle because of the hours. I'm done at noon, which is great, but if you've been up since 3:30 and drinking Mountain Dew and trading all day, you're not that. So I came back to Chicago. I worked for a sister division, a related division of opportunities and options as a broker there in the same vein with the same Ken Roberts clientele. But I still had the itch for the floor. And so I got an item badge for night bonds to get in, just so to kind of get in and test the waters. But that's difficult, obviously, because you're doing your real job during the day. And then to try and trade, I don't know if you remember night bonds. Night bonds were open from 6 till 9 at night. And that was it. So this was Treasury bond. This was not 10-year notes. This is when Tom Baldwin and those guys ruled the world. Robbie, they ruled the world. These guys were the greatest traders in the history of the world. I mean, some people look up to Michael Jordan. Traders look up to these guys. These guys were amazing at how they did it. So night bonds were a way to kind of learn how things worked. And I learned some valuable lessons. You got Goldman Sachs, sell 500. And you're long a couple 3, 2, 5 bonds, whatever, sell 500, sell 500. And they'll do that 10, 15 times in a row. You got to learn, get the F out of the way, so you learn valuable lessons on that. But the hardest part was that if you didn't close out your positions, you try to carry it till the next day. The markets were open in Japan and they didn't take stops at night. I'm a young guy. I lived in an apartment across the street from Wrigley Field, one of the places that looked into the ballpark. So living the life. And I had to call Japan at night, at 1 o'clock, at 3 o'clock in the morning to see where the markets were. So I knew what I was coming into the next morning because you couldn't put in a stop loss to protect your position. You were just blind. The idea is to learn kind of how it works. And then I use that badge to kind of trade off the floor a little bit and dabble in it. I wasn't a very good trader. I wasn't, but hopefully I've comforted myself saying it wasn't because I don't know how to trade. It's just because the skills at that time were so much different than what you need to trade now.
How much money did you need to trade night bonds?
You didn't need a whole lot of money. I think it was like $10,000. It was not a whole lot. I wouldn't even consider it nice. I would say I dabbled. I never quit my job and invested all my, mental and financial fortunes in the vocation. And I kind of wish, you kind of wish you would have done it just once to see, if you lose everything, you lose everything. And that's what a lot of guys did. They just gave up everything they had and just went all in. I'm not a gambler. I'm not a poker player. I don't like going to Las Vegas because I don't like, I'm all about probability. That's why options are what I am involved in and have been involved in for 20 years because it's all about probability. And a lot of those were just very binary and it seemed like luck. A lot of it, you got to be in the right place at the right time and, to be making money on the floor.
What did you do after trading night bonds?
One of my things is I am not an outgoing salesman. I'm not a salesman at all, unfortunately. I get very uncomfortable. So I would try and form relationships as a broker where I'm helping newsletters, software users, whatever, I'm helping their customers. I know their products and I help their customers, because if I can help their customers, that helps them sell more products and they've got a satisfied customer. So I would find relationships. I was about finding relationships, and I was pretty good at it. And I found a relationship with one company, the red light, green light company called Wise Trade. They were a phenomenon after Ken Roberts, but they did stocks, they did options, and they did currency. And I'm trying to get their business, and they're going to give me all their business because they've got hundreds of thousands of customers, and they need somewhere to send them that knows how to use. And it's a red light, green light software that it follows trends, and when the trends cross over, you're trading with the trend. You can trade short-term trends, medium-term trends, or long-term trends, and so forth. So it's a very disciplined tool. And it's actually, if you follow it, you can be successful. But human nature, people know better than anything, right? It's not always right, but it's just an algorithm that puts you on the trend of the trade, and you put in a stop loss. If you get knocked out, you get knocked out, whatever. I would pursue them, and just one afternoon, I just said out loud, why don't you have a commodities product? Because commodities markets, at the time, there were probably 20 good liquid commodities markets that a retail trader could trade. And that was enough to have a red light, green light system. And, you could use options to benefit your probability and so forth and so forth. So I developed that for them. I laid it out as far as, how the margins work, how points work, how the ticks work. Each market's different. There's a lot of intricacies in commodities that are totally different than in stocks and stock options. So I helped them develop the software with the software developers. We created it, and then they wanted me to be the face of it. And I initially said no, and no, because I don't want to leave Chicago. Chicago's where it's at. Chicago is it. And as far as opportunity goes, they were in Dallas, and I would fly down on Sunday night and fly back on Friday. So I did that for a couple of years, and they developed Traders Television, which had 8 hours of live trading using the software every day, and people logged in. So this was, before Zoom, obviously. This was before Tasty Trade, which ended up making $1 billion with Tasty Trade. But, hey, they didn't sell it when they had the opportunity to utilize it, and it was an opportunity missed. And that's one thing about me personally. I regret missed opportunities more than anything. That's one thing I regret. So anyways, I did that for a number of years, and that introduced me to the television side. And before that, I had developed some options. I'd been in the options business and developed some options brokerage divisions, because stock options were really coming on and from the retail space. And it's so much better to trade, in my opinion, to trade an option strategy than buy or sell a stock, because buy or sell a stock is binary, right? You're either right or you're wrong. But there's so many things that you control with options. You can control your strike, your time, probability. Are you going to make money from the market not going somewhere? Are you going to make money from where it's going? Are you going to make money from what happens in a period of time? So there's a lot of different advantages. And so I created a options brokerage, and we were, what do you call that? Options principles, which at the time, which is a very interesting, thing to add onto your Series 7. And it was, customers wanted that. So it was meeting a customer need. I was able to charge a premium commission because they were able to talk to someone that knew options and could help them. And importantly, I could help them route orders. So I could help them route orders so they could save 10 cents. Now, 10 cents is $10, but on a 10 lot, you're saving $100. So if I'm charging a healthy commission and I'm saving them $100, everybody's happy. So it worked for years, and the technology started to catch up. And like anything else, like the futures markets, like the futures options, markets became more and more efficient. And that's the downfall of, being a broker or being a floor trader, especially, is when the markets get too efficient.
What was red light, green light?
So it was software that, as stocks moved, it would produce red lights if it was moving down and green lights if it was moving up. So you would pick different time frames. You'd pick a 15-minute time frame, or you pick a 1-day time frame, and you pick a week time frame, depending on what kind of trader you are, an active trader, a day trader, or a swing trader. And you would look for these to build on themselves, and the trends to slowly build, and you had discipline and a reason to get in or get out. So this was a great discipline tool, and it had, like I said, 100,000 customers, and we supported it with the Wise Trade TV, and it was a phenomenon. It was a phenom, just like the Ken Roberts thing was.
How did you progress in your media career?
Since then, I came back from Dallas, and it was right after 2008. And so I think we're back in 2009 or something. And at that time, financial television was starting to take off. And here at the CBOT, it's a small world. And so they would ask me to do television interviews and commentary on what's happening in the markets. And I was pretty good at that. And I liked it, and it gave me visibility, so that my visibility then, people would see me and they would subscribe to my trading services. Again, now I focus strictly on stock options that I have for, how long? 15 years now. It's been pretty successful, with that. So it's all come full circle. Started off in, WLUC TV6 Marquette, at 17 as an intern, and, decided I didn't want to take the ride it takes to be in television. Back then, you had to start in a small town, which I did. And then you'd have to go to Minnesota, and then you'd have to go to Green Bay, and then you'd have to go to, Flint, and then maybe you could make it to Detroit. By the time you make it to a big city in Chicago, it's a long, hard road. So it ended up, all coming full circle, that I took my commodities knowledge, built on that, my understanding of psychology in the markets. My dad's a psychologist, so I think that's why I have a lot of insight on the masses of how people act and the markets, because markets are really all about psychology. And it's discipline. It's not hard. Making money is not hard. Keeping money is hard. That's what it comes down to, because of psychology. It's that simple. People know how to lose weight. It's not that hard. People know how to make money trading. You have to be able to control yourself psychologically. And if you know yourself, then, until you know yourself, you can't be successful.
What was your reaction to the meme stocks?
My reaction, and I'm an old grizzled trader, okay? My reaction, those people are crazy, okay? But crazy made money. I didn't believe in Bitcoin until, because I'm from old school, that I always want a counterparty. I want an exchange because I want to be able to control my counterparty risk. In Bitcoin, you didn't know where your Bitcoin was, or who you were buying it from or selling it from. I mean, who knows where it's going to be. My point was, with meme stocks, I missed out on some opportunities. I made a little bit of money in AMC, and I made a little bit of money in something, but I trade options. And you could take advantage of some crazy things because the volatility got extreme, like 800%, meaning those options were unfairly priced. And the meme guys, they did a service, though. They did a great service for my business. They showed people that options are the answer. Options are the way to make money. Now, the way they did it was 100% wrong. They bought the lowest probability options, and they bought too little time. They would buy something for 2 days from now, and the stock would have to move 400% for that to actually be in the money. So, they didn't do it right, but I love the fact they recognize that options are the greatest vehicle to trade because you can control your probability. So if you would have bought in the money options and you would have bought time, that's how you can be successful. If you don't use those variables properly, that's why people lose money in options.
What about the explosion of trading in India?
A lot of them are losing a lot of money trading options in India because, again, the same kind of thing. There's obviously a potential pool of people that is huge to take, that want to take advantage of the opportunity, but they're not using options properly. So I think the greatest growth potential in our industry is in the financial industry is getting people to understand the light bulb will go off for people that there's very, 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 I'm not trying to be a smart guy. I'm just trying not to be stupid. I'm going to try and use odds in my favor. And so I'm going to use the most ridiculously simple option strategies instead of buying or selling a stock that will take advantage of a modest move in the stock that produce big gains in the options. You have limited risk. You buy enough time to be right. So there are better ways. And I think if we can get people, I've seen this hundreds of times. I mean, I've taught thousands and thousands of people how to trade options. That once you teach people a better way to trade with some basic option strategies instead of buying or selling shares, they have so many advantages, and then they rarely go back.
Do you have any final messages?
Though I'm on TV almost every single day, I want to tell people, turn the TV off. Turn the TV off. Do not watch it. Do not watch it. All right? Nothing good comes from watching financial television. Rarely will someone come on and say, listen, this stock I think is going up. You should buy it here. You should risk this, and you should get out here. Very, very rarely. Obviously, everyone has different risk profiles. But you got to understand the motivation for that financial television. Financial television is to sell advertising. And again, to get back to psychology, what are they trying to do? They're trying to get you scared, worked up, so you'll continue to watch. They're not there to help you make money. They're there to keep you engaged so you'll continue to watch the programming, and they can sell ads. That's all it is. And it's going to, what are you going to hear? You're going to hear something that's going to spook you, scare you. You're going to, not follow your trading plan. Trading's not hard. Identify, execute, manage, maximize, and then repeat. That's it. You can do it in short term, long term. It's exactly the same thing for every single trade. You've got to make it mechanical. You've got to make it methodical. It's boring. Trading is ridiculously boring, but making money is fun. All right. So if you can look at it that way, you're not doing this for entertainment. You're not doing this, because it's a game. You're doing it to make money. So be bored.